Hi, my name is Peter Harriman. I work as a certified business advisor with the Maine Small Business Development Center. Hopefully, this is the third of 3 videos that you're watching. The first being the LLC, sole proprietor and partnership. The second being on corporations. And the third now being what happens when business gets creative and tries to marry both of these concepts together to make the S Corp, right? It's a very popular tax strategy that I hear often, but it's not very well understood. So this video hopefully will go through a little more of what is an S Corp and why should I choose it, okay? So as I said, the S Corp is a combination of the LLC with the C Corp, right? So it's a little bit of both sides coming together. Now, how do both sides come together? Well, first it takes from the corporation, right? It's an S Corp. So its taxes are going to be very, very similar to a corporation. Not the same, but similar, right? Now again, we want to compare apples to apples, so we're going to take the numbers that we had, the 50,000 over here, we're going to bring it all over. So like a C Corp, with the S Corp, you need to pay yourself a salary, right? So you have a salary. I'm going to put reasonable. That'll come into play very soon. So if you have $10,000 left over for profit for the S Corp, what happens to that? Well, unlike the business where you could have reinvested it in the business and not pay taxes, you don't have that option. If you have profit, you have to have what's called a distribution. I've heard it called a dividend as well. I like to call it a distribution so we can kind of keep them separate, right? Now this distribution, I'm just going to draw a line so we has one major advantage over the other 2 strategies, and this is why it was developed. One, the corporate tax, or one, the self-employment tax. I'm writing on myself. It doesn't have them. The S Corp effectively, on the profit, avoids the corporate tax and the self-employment tax. Right? It does still have your income taxes, right? And if you have the state and fed like you do in Maine, it's 10 to 15%, right? That's 10 to 15% on the 10,000 versus 31 to 36 on the 10,000, with the remaining salary being the 25 to 30, or 25 to 30 on the whole 50,000, right? So a lot of people will choose this tax strategy, the S Corp, because it allows them to have this distribution that has, in essence, 10 to 15% tax savings in this case, right? Because we're not paying corporate tax for 21%. We're not paying the self-employment tax for 15%. So a lot of people like this strategy because if they're in a very high-paying job or a high-paying market and their reasonable salary can be reasonably low, again, I'm going to get to that, then their distribution might be pretty high. Again, just like we had in the C Corp, this distribution is not being taxed Social Security and Medicare. So if you are someone who wants to maximize your Social Security and Medicare payments, then this might not be the strategy for you. But the real key to the S Corp is this reasonable salary requirement. And this is where I focus the most when I talk to businesses. When you are an S Corp, it is not a matter of not paying yourself a salary or paying yourself a very little salary, right? The IRS will not think it's a reasonable salary if you pay yourself $1 for a year to maximize your distribution so you don't have to pay as many taxes, right? That's not reasonable. So when the IRS says a reasonable salary, it's a very real term to them as far as if you were doing this same job for someone else, how much would you get paid? And this is where I highly suggest you get a third party like an accountant to tell you, hey, what is my reasonable salary? Because that reasonable salary is where you really want to focus on when you make that decision to jump to an S Corp, right? Because if you can make a reasonable salary and have a distribution, that's where your tax savings come in. If you're just starting out on business and you don't know if you're going to make a reasonable salary, well, you might not have a distribution, right? Because an S Corp, you got to remember, if you're on salary, there's payroll, right, to think about, and that costs money. This is this whole separate tax form, that costs money. So the S Corp has some hidden costs in it where you want to make sure whatever distribution you're looking at, that it's a sizable distribution to make it worthwhile if this is the tax strategy you're trying to go for. But what's more important is that you have a reasonable salary that's either verified by a third party like an accountant, or you yourself have put together documents that show how did I get to the reasonable salary requirement for the IRS to show that I'm not trying to avoid taxes here. Because remember, avoiding taxes this way is illegal. And the IRS will determine what the reasonable salary is for you if you do not. So make sure that is the key or the linchpin that you're looking at when you're deciding the S Corp. Now let's say you chose an S Corp status and then you decided, nope, I want to go back to being an LLC or a C Corp. You can do that. But if you do that, the IRS will not let you then jump back to an S Corp right away. Right? You have to wait a few years before you jump back. So make the decision with your eyes wide open of, do I want to be an S Corp right now? If I know what my reasonable salary is and I can project what my profit's going to be so I know how my distribution is going to be, yes, maybe it might be worth having or looking into the S Corp. Or if I'm starting, I don't know what my income is going to be, so I don't want to put people on payroll, maybe the LLC is right for me. Or maybe I have a company that is just needs the protection, but otherwise the taxes are fine with me. Maybe a C Corp is what you want. So again, it's a very easy question of what entity type should I be, but it's not a very easy answer because there's a whole bunch of choices that really depend on you and your industry. So remember, seek professional help, seek an accountant and a lawyer to make sure you know all the different variations because things that we haven't talked about are the S Corp. There's some requirements. Anytime you have a corporation, there's requirements involved as far as how many shareholders and what the shares are going to be like versus LLC or whatnot. So there's a lot of variances we didn't talk about, but what I was trying to do today was trying to show you, okay, in general, what does a tax situation look like for an LLC, a sole proprietor, or a partnership versus that of a C Corp and that of an S Corp. Hope you found this beneficial. Let me know. Give me feedback below. Thanks.